Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets buried within company filings and try not to get lost in the corporate jargon jungle. You know we love a good financial update, and today we're diving into some very interesting recent activity from Fortress Credit Realty Income Trust. Alright, so what is the big news here? Well, it looks like Fortress Credit Realty Income Trust has been busy making some big deals with Goldman Sachs Bank USA. They've inked some agreements that essentially let them get more money to buy or create certain kinds of loans. Think of it like a really big line of credit for their real estate related lending business. Now, this isn't just one deal. It is actually a few amendments to existing agreements and a brand new one. Let's break it down a little. They've amended 3 existing agreements related to selling and repurchasing loans with Goldman Sachs. The key takeaway here is that the total financing available under these amended deals has been boosted significantly. We're talking about an increase that allows for up to $1 billion effectively. That is a substantial amount of money and signals that the company is gearing up for quite a bit of activity in acquiring or originating loans. Now, with more money comes more responsibility, right? So alongside these repurchase agreements, they've also amended their guarantees. These guarantees are basically promises made by Fortress Credit Realty Income Trust itself to Goldman Sachs. What is particularly interesting are the updated financial requirements. They now need to maintain a tangible net worth, which is essentially the company's value excluding intangible assets like goodwill, of at least $750 million. But here is a kicker if they manage to close $1.5 billion in capital commitments. That tangible net worth requirement jumps up to a cool $1 billion. They also need to keep a certain amount of readily available cash or liquidity, which has specific minimums that can go up to $45 million depending on the value of the assets they're dealing with. This shows they're being asked to prove their financial strength as they take on more business. But wait, there is more on top of amending existing deals. They've also signed a completely new master repurchase agreement with Goldman Sachs. This new GS repurchase facility, as they call it, is also focused on the acquisition of certain loans. This one is for up to $200 million. So in total with the amended deals and this new one, we're looking at a potential $1.2 billion in financing capacity. This new facility covers the purchase, sale, and repurchase of mortgage loans secured by residential, multifamily, or commercial properties. This new agreement has a termination date of the 21st of November 2027, with an option to extend it for another year under certain conditions. The interest rate on any money borrowed under this agreement will be based on the term SOFR rate, which is a benchmark interest rate, plus a margin that Goldman Sachs and the company agreed upon for each transaction. This is pretty standard for these types of financing agreements, and just like with the other agreements, Fortress Credit Realty Income Trust has also provided a new guarantee for this facility. This guarantee covers potential losses and lays out financial covenants such as minimum net worth, liquidity, and limits on how much debt they can take on relative to their equity. It also includes what are called non-recourse carve-outs and bad boy provisions. Basically, these are standard clauses that protect the lender Goldman Sachs in case of things like bankruptcy or specific bad actions by the company. In extreme cases, like if the company itself is subject to bankruptcy proceedings, this guarantee could become fully recourse, meaning the company would be liable for the entire amount of the facility. So to summarize, Fortress Credit Realty Income Trust has secured a substantial amount of financing, over $1 billion in total, through amendments to existing agreements and a new agreement with Goldman Sachs. This allows them to expand their operations in acquiring and originating loans for various types of properties. Now, looking at this from a big picture perspective, what does this all mean? It tells us Fortress Credit Realty Income Trust is actively pursuing growth. They're not content to sit still. They're going out and securing the capital needed to make strategic moves in the real estate lending market. The fact that they're entering into these large repurchase facilities with a major player like Goldman Sachs suggests a level of confidence from both sides. Goldman Sachs is clearly willing to lend significant amounts of money, and Fortress Credit Realty Income Trust is signaling its intention to use that capital. The updated financial covenants on the guarantees are also important. They show progression in the company's financial health and scale. The increased tangible net worth requirement, especially the jump when they hit certain capital commitments, indicates they need to demonstrate robust financial backing as they grow. This is a common practice to protect lenders. What's a notable risk here? Well, as with any significant borrowing, there is the inherent risk of debt. If the underlying loans don't perform as expected, or if market conditions turn unfavorable, servicing and repaying these large facilities could become challenging. The company's success here will hinge on its ability to carefully select and manage the loans it acquires or originates. A positive aspect is the clear strategy. They are clearly focused on expanding their loan portfolio, and they have secured the necessary funding to do so. The relationship with Goldman Sachs is also a positive sign. demonstrating access to substantial financial markets. In conclusion, Fortress Credit Realty Income Trust is making bold moves to expand its lending business. They've significantly increased their borrowing capacity with Goldman Sachs, which shows ambition and likely a solid business plan. The increased financial covenants on their guarantees indicate a commitment to financial discipline as they grow. The key for investors to watch will be how effectively they deploy this new capital and manage the associated risks. Alright, that is our breakdown of Fortress Credit Realty Income Trust's recent filing. What is your take on these financing deals and what they signal for companies' future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord link in the description for more community interaction. Thanks for watching. See you next time.